So it seems that Christmas might be coming early. If you were wondering why the market pumped yesterday, I mean the S&P 500 and just a bit Bitcoin as well, it was because it seems that the Fed is pivoting. However, before we celebrate too early, let's check the facts and what is behind, because this might be just a relief rally. Hello everyone, this is the Breaking Free channel, and if you like the content, you might as well subscribe. Now let's see what happened yesterday. As you can see, Jerome Powell, the Fed chairman, said that they might ease a bit on the rate hikes. The more moderate rates might come as early as December. And this is very much interesting and also a bit strange, because it was just 1 month ago when he said that the rate hikes will continue to increase, and the last one, which probably will be mid of next year, will be so high that no one will be able to anticipate it, and it will be the last blow to the inflation. Now, in contrast to that, yesterday he said that they are prepared to decrease a bit the rate hikes. He said that despite some promising developments, we have a long way to go in restoring price stability. Obviously, the inflation is very high still, and that minus 0 point something percent in comparison to the 20 something, which some countries struggle with, it's nothing to say that it's a development. It's more like a stagnation period, and we still don't know whether this increase in the inflation will continue or not. However, considering energy prices, I think we are consolidating and we might go a bit lower. Now, he said that it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. Now, obviously, this is very strange, as I said before, because 1 month ago he was very hawkish and everyone was expecting him to increase the rate hike again by 0.75 or maybe 1%. Despite everyone's expectations, now we are looking at a 0.5% rate hike, which is very mild comparing to what we endured this summer. Now, as you can expect from this channel, we are going to speculate what motivated them to reduce the pace of the rate hikes. And I have two theories. One is that they see that many companies are laying off a lot of people, big names like Facebook, Amazon, among a lot of other companies who claim that they are going to lay off from 3 to 10, 15% of their staff, which would mean from a couple of hundreds to a couple of thousands people. We know that Facebook just laid off 11,000 people, and that is a big risk for the economy because many people will not be able to pay back their debts, pay back their mortgages. There will be no circulating money in the system, and the economy's engine is the consumption. If there is no consumption, then more and more companies will go bankrupt. And obviously the interest rates won't help them because they just tripled or quadrupled in the last couple of months, let's say since February, March. Now, this is one side of the story. Maybe this is why they are pivoting, maybe that is why they want to help the economy. However, as we know, the Fed doesn't really care about the economy because their only focus is to make the dollar strong. And making the dollar strong is by rate hikes. Therefore, when they decide not to increase the rate hikes anymore that much, they decide on weakening the dollar and helping the economy. So what could be the other part, the other very important party, let's say, which would motivate the Fed to decide to apply a milder approach, possibly jeopardizing the dollar's strength, therefore increasing the state's debt? As you can see in this article, BlackRock registered a 16% dip in Q3, and their total asset decreased from 8 point something trillion dollars to 7.96 trillion dollars, which is obviously a huge amount of money. Their investors will get less profits, and that would motivate, let's say, the CEO and the executive boards to make some calls to the government, to the Fed, in order to help a bit the economy so they can recover from this huge loss, so they can position themselves in a better way for the upcoming recession, which is still coming because the inflation is still not solved. The rates are still high and they will be higher because it doesn't mean that the Fed will stop. It just means that they will not increase it by 0.75% every quarter. They will increase it by 0.5%. Now, if anyone thinks that BlackRock doesn't have that much leverage on the US government, I think you might be wrong. As I covered in one of my previous videos, you know that BlackRock in 2008 lended some money to the US government so they can help the companies like JP Morgan. Therefore, you can assume how much leverage BlackRock has on the US government if they give loans to the governments so they can bail out big banks in crisis. However shocking and disappointing is this could mean a good thing for crypto, at least on short term, because BlackRock said that despite the FTX saga and despite what happened in the cryptoverse after FTX went bankrupt, they still think that the blockchain is a very good technology and it is for the future. So as you can see, BlackRock is preparing to enter the crypto. They are probably already in crypto. They probably already prepare for Bitcoin ETF, spot ETF, which was not granted to anyone else on the Wall Street. And if you ask me, they are just waiting for BlackRock to be prepared to have enough Bitcoin, and for that they need to buy Bitcoin on a lower price, hence the manipulation. So what can you do? What can we do, mortals, in this situation? Obviously, we need to see the trend and we need to see how these big companies act. I just want to add here that the CEO of BlackRock also said, as I just mentioned, that blockchain is revolutionary and it's a technology which we don't want to ban or to miss out on. Since then, articles like why FTX was an honest mistake and we need to learn it, instead of articles like why the crypto is the problem and we need to ban crypto because, like FTX, everyone is losing their money investing in crypto, and check FTX, okay? That is a crypto problem. Now, FTX is not a crypto problem anymore. The tech is revolutionary and you can expect a lot of FOMO, you can expect a lot of good articles about crypto for the simple fact that BlackRock decided that, hey, this is a good point to enter. I'm not saying that we are facing a new bull run. I don't think so. I think everybody knows that the economy is not in that state. We do need some kind of a reset. We do need some kind of a redistribution of the money or of the assets. Therefore, I still think that this crash or recession might have been a bit shifted, might have been a bit pushed towards 2023 end of the year instead of summer. However, I'm still waiting for that crash because I think that will be the best moment to accumulate. In the meantime, I do think that we cannot say when the bottom is. This might be the bottom, however, I don't think it is, but it might be. I don't know. You never know when they start to print money again. Therefore, it is always good to DCA to buy some, to have some, and remember, don't keep it on an exchange, because on the exchange, on a centralized exchange, the crypto, the asset is not yours. You are not holding it, okay? That is monopoly money, let's say. Therefore, keep it on your own wallet, whether that be a software or a hardware wallet, preferably a hardware wallet, a cold one which is not connected to the internet all the time. That is the safest place where you can hold your crypto. So let's see what is happening next. Let's see whether we will have relief rallies or maybe trend pivots. As I said, I don't think that we are at the bottom. However, we could see some kind of a relief rallies, maybe going back to the 30,000s. Who knows? One thing for sure, I am buying with small pieces. Take care.